Good afternoon. Thank you for joining us. Andrew Benioff with the Independent Lodging Congress and Llenrock blog. We're here today with Adam Valente, Managing Director of Rockbridge Capital. Adam, thanks for joining us.
Pleasure. Thanks for having me.
Thank you. So we're talking with Adam about capital markets today. Adam leads investment origination group at Rockbridge and is responsible for originating, structuring, and underwriting new debt and equity investments. Since joining Rockbridge's investment group in 2004, he's originated or underwritten over $500 million in hotel transactions. Adam has previously served as a senior consultant with PKF Consulting and studied at the Conrad Hilton College of Hotel and Restaurant Management at the University of Houston. So let's start with a question about financing independent hotels. And there's a common misconception, or there's a common conception, that independents are harder to finance than branded properties. You think that's true today, and is it changing?
Yeah, great question. Historically, it was very true. And what we're finding in this cycle now is that given market dynamics, the fact that consumer preferences are changing really to the favorable side of an independent experience, more of a tailored, customized approach. The guest needs are dictating that brands, generally speaking, may not be what they once needed to be. And as a result, we're finding that the performance, penetrations, cash flows, therefore values, and the desire to capitalize these transactions are much more friendly today than prior cycle. That independent is no longer perceived as higher risk. Unquestionably, still today, the sponsorship, the real estate fundamentals all need to line up, but definitely see a bridging of the gap, if you will, branded versus independent in the way pricing is dictated or just general lender interest.
I'm also assuming that's also predicated on one of the very important facts when you're looking at that is location. And what I mean by location is, are we talking about urban, suburban, or are we talking about primary, secondary, tertiary markets? Is that
Right.
Also correct?
Very correct, definitely.
So independents work some places and not others?
Absolutely. Great point. The way we view it, we're in a city today where independents have thrived, and going to a branded scenario actually likely detracts from long-term value because of the fee structure. Not one size fits all, to your point. You can't necessarily just pick up the Rittenhouse Hotel and put it in suburban Columbus. Well, we would like that as Columbus native. That's just not
Right.
That's not Courtyard and some of the other brands. The transferability is still there.
Got it.
But that's also where we think there's a lot of the value to be created is in markets that are dynamic, 7-day-a-week markets where the segments are vast and varied. The independent experience is now sought after more heavily than we think it used to be. And technology and things like TripAdvisor and ways that we can share opinions on our experiences and not know one another yet trust one another, it's pretty unique in the environment.
Agreed.